All right, the S&P 500 and the Nasdaq 100, we're going to be going over the indexes, a few equities, but ultimately, I'm going to tell you right now, I do believe this week is probably the most influential trading week that we're going to see for the next few weeks, maybe 2 to 3 months. I'm going to tell you right now. Now, of course, I do think data down the line is going to be very important, but I believe this week will have a direct impact immediately. Let's go over exactly why. There's a few things we didn't cover in Friday's video, and I think you need to be prepared for going into tomorrow. Now, I'm going to tell you right now, based on the charts, just really quick visuals right here, give you an idea of where we're at. Supply zone, we again broke another one. Continue this rip to the upside, right? Clearly break above, invalidated, mounting on top, trying to make a new local high on SPY 410. Now, we came to our targets on SPY, perfect, like right to 408. Going into next week, I think 410 is like the end-all be-all level. It's like, can we finally break above it? But let's talk about what's fundamentally going to be moving the market right now. First off, before we get into the Fed, this is earnings next week. We have AMD, Snapchat. Snapchat's actually really big. If you don't know, I'm just going to tell you right now. Snapchat, for some reason, moves the market better than some of the big five when we're looking at the SPY. You have Meta, Amazon, Apple, Google, QCOM, Ford. I mean, everyone. This is the week. This is the earnings week. Now, to start the week off, though, I'm going to tell you, I think we have some strong names out here. We have SoFi. SoFi before the bell tomorrow. Not the biggest, but I'm going to tell you, you have some of these, you have the oil plays, Phillips 66, Marathon Oil. Do you have Exxon? I'm trying to see where that is. I might have already had it, but a lot of these oil names are still coming out. They're going to continue to show profits and profits and profits. And that's what kept the Dow up for so long, was a lot of these oil plays. Now, the question though, right, is going into AMD and these tech names. How are they going to report? Now, we saw from some of these other earnings like, TSM, and then we also saw from Intel, a lot of their market shares going over to AMD and NVIDIA. So those are going to potentially be great names there. But again, the big question mark, and I continue to say, is Meta, Amazon, Apple. I definitely think those have room for pain. I'm going to tell you now, based on demand, based on what's happening out there right now, I just anticipate those are the weakest areas of the markets when we look at earnings. But if they beat, I'm going to tell you right now, if Apple beats, you're going to fly. It's just what happened last time. It's going to happen again. So be on the lookout for that. Next up, we have this coming week, and this is just where everything just goes bananas, right? So to start the week out, Monday, not too much. Tuesday, you got a little bit going on here. But the big day, obviously, you got, I'm trying to see employment wages. I do think employment wages are going to be important. We're going to be talking about that here in a second. Consumer confidence, I don't think it's that valid. And then, of course, Wednesday, the Fed interest rate decision, the big boy, right? That's the big one we got to be watching. Now, from this point, though, what happens and how do we see us coming out? Now, I'm going to tell you right now, going into Monday morning, I envision that we have some upside right now, okay, going into Monday. Does that mean that we have to continue running? Does that mean that we're going to go to 420? No, that's not what it means. But right now, based on how we closed Friday and how we continue to move, we continue to break local highs. We continue to make higher highs. We continue to make higher lows. And again, giving you a visual of what was happening here with that channel. Remember, this channel, it hasn't gone anywhere. It's still there, right? We keep talking about it, right? Very easy to identify. Clearly in the channel, you can actually bring it on just a little bit right here. And you can see all the touches that we're getting. It's pretty beautiful. You can actually draw it right here. I'm sorry. I drew it a little bit wrong there the first time. But beautiful. This is how we've been trading, right? They're not making it up. This is just out there. So you're just trading an upward channel. People are trying to call it a wedge. It's not a wedge. You're just clearly in a channel to the upside. So you have to just be prepared for what the market's giving you right now. Now, for myself, how have I been trading? Again, it's been quick in, quick out. I do have a one dated position, but that's a deep in the money position, and it's just sitting pretty for me right now, and that's on AMD. But besides that, everything's been quick in, quick out, quick in, quick out. And this has been working for us. I had been trying a lot of these swings lately. That was the focus. But then I just said, you know what? We need to back off. We need to go straight to, what's tried and true here on the channel. Quick ins, quick outs. And we did a lot of this on the live streams as well. If you don't know, Monday through Friday, we do a live stream here, 10:30 a.m. Central here on the channel. We cannot leave that on the channel though, because YouTube will push us out as a streamer, and we're not a streamer. I like to keep the news show, everything like that here. But to give you all visual, these are just some of the trades. And a lot of these trades we mentioned for free. We mentioned a lot of them here though. Amazon, Nvidia, big winners here. This isn't our trades, this is other people's. This is all day from Friday and Thursday. This is all still Friday. Sorry, all these just crazy wins that we had going on. But we had to switch the focus. And that's what I try to say here though, is you have to trade what the market gives you. And I think right now, just trading the trend has been working for us. But I'm going to tell you right now, I am getting more to the edge of my seat as far as not turning bearish yet, but looking at the market and saying, okay, I need to pump the brakes, maybe not be as bullish as I have been. Why? Until we break 410. Well, if we break 410, we're probably good to go. I'm going to tell you right now. But you can also see this is a supply range right here. You can get a really good visual. You can see this on the 2-hour time frame really easily, right about here. That's the big boy. I think this is the big boy now. We've invalidated everything. This is it. If we break 410, I think we have a lot of room of upside. But again, it's imperfectly in line with what's happening this week. Fed meeting. A lot of questions about this. I know people are going to be saying, Tyler, what do you think is going to happen? I believe right now that you're going to get a price in of a 0.25 hike, which is already priced in. Sorry, I've been saying that since November. I anticipate that you're going to have a decent meeting. Okay. Now, before we go any further into this, I have to ask you to do two things: like and subscribe. Again, I kind of do a bad job of trying to get people to subscribe here sometimes, but again, unbiased. I'm telling you what I'm doing every single day. I do have, the Discord, but we also have the Twitter, which is free. We have the live streams, which is free. We're trying to get more and more free information to you guys. And we're also going to be having a newsletter coming out to give you like a watch list, maybe every other week, but we're going to have that coming out also. So stay tuned for that. That'll probably be on Twitter first. So make sure you're on Twitter. But as we get back into this, this is where I'm at. And this is overall what we're looking at here. Going into Nasdaq, getting a better visual here. I mean, the Nasdaq, you're leading. Again, this is what you want to see. And again, I keep trying to go over and explain this to you guys. You've already broken your highs from December and made new highs basically since the beginning of September. Your range here on Nasdaq, if you get the continuation we're really looking for, is all the way up to around 12.7, 12.8. Very illiquid in this range. Very, very illiquid. So you're getting to that point to where you're like, we have to, at least use a little bit of caution because we're getting to that range on SPY. But what have we been saying here on the channel? That once you get the tech actually leading the market, this is when you can really turn bullish. Why? Because if we look back to when we've had real runs in the market, 2021, great example, but even in, June or back in March, the big runs or big bounces that we had, what was leading? Was it the SPY? No. Was it the Dow? No. It was tech. That's when we had, Meta, Apple, all those rallying like crazy back to the upside. And you've been having that same type of reaction. And again, that's why I keep trying to show you guys the big six here, right? The big six, if you don't know: Apple, Microsoft, Nvidia, Google, Amazon, Tesla. And as you look here, you can see this was your rally that you had from October into December. And I mean, what do you say about this, right? Range trading. This is your rally for the past 2.5 weeks. Massive push of liquidity into these names, right? And you're breaking local highs you had back in that range also. And if we look back on the big six, where's our next clear target? All the way back at 1100. So we still have a lot of room on these equities also. This is things we need to be taking into, just our train of thought right now of what's really moving the market. And you're finally getting that behavior. But again, you have to be cautious based on where you're at. But I'm going to tell you though, if this continues and you get above 12, start moving back above 12.3, I think you have almost 400 points of upside at 12.7, possibly 12.8. But again, this is just area of caution. SPY, 410, the big level. If you get above 410, it's like, in my opinion, I think you're probably just going to keep going. You have room all the way up to like 419, 420 at that range. No liquidity once again. And this is where you have to be ready to pounce on the opportunity. And that's been overall what I've been looking at. Now, I do want to go into a little bit of names I'm looking at. And actually, before we do that, I want to go over some volume stuff. I will mention to you, on Friday, we had some it was declining volume, to say the least. It was about 68 million. Wasn't atrocious, wasn't fantastic by any means. I do want to say that right now, but that is worth mentioning right there. I just want to highlight that. I didn't cover that. It's not too concerning yet because it's not extremely low, but it's definitely something to take into caution right now. But again, I think the biggest factors this week are going to be earnings and then going into that Fed meeting also. But even with let's say a halfway not so good Fed meeting, let's say the Fed meeting comes out a little bit hawkish, which I don't think it will, but it's possible. And people keep saying, well, the market's doing so good, Powell doesn't like this. Let me tell you right now, before I even go any further, I'm going to see how much time I have. I'm only 10 minutes in, so I'll probably go 5 more minutes. But if we're looking here, Powell's concern is not the stock market. Powell is not in charge of the stock market. He's in charge of what's happening and the health of our economy, okay? Now, his main goal is to get inflation down. It's not to get stocks down, okay? Now, we have to also understand the stock is not the company. Those are two different things, right? We have to understand those are, it looks like I'm cut that out. So we have to understand that's two different things right there. And so when we're looking at this, we come to this conclusion and we see everyone on Twitter and saying this, well, the market's just running and Powell has to hate this. That's not true whatsoever, okay? Now, Powell will come into grips and tell people about unemployment and things that have to happen there, which I agree those have to happen. But he's not going to say, oh, the market's just running too much, guys, and this means that the Fed has to continue raising rates. No, that's not what it means. Now, inflation starts growing again, which we assume it's going to down the line, which, again, long-term, still bearish. We understand that then that'll be a problem. But right now, it's all about unemployment and things happening in that sector around inflation. So you have to understand what's happening there. Now, do they kick the can down the road and do they say, look, energy is the only thing that's actually been moving. We need to actually start handling what's happening here. Inflation's not really going down. That would be bad. But I just don't think they're going to say that because they haven't even stuck to that narrative yet, which, again, I'm not going to try to change the curve until they actually prove that they're going to acknowledge what's really happening there. So that's my visual right now. And again, I'm staying liquid every single day into the end of the market, most likely. Every day I'm going into very liquid, and then I'm trading the next day based on what we get. And that's why I post so much on Twitter, so I can try to keep you guys up to date also. That's just my strategy right now. I think swinging is you're taking wild guesses right now. Even going into tomorrow. I have a bullish outlook, but it's not worth me holding a lot of equity going into tomorrow, right? I'm trying to stay pretty liquid so I can go in and out and take advantage of what we're getting. Because when the bulls do show up, it's been very easy. And like I said, you're getting that continuation very easily. So that's my strategy in the short term. It's, yes, I like the bullish outlook, but again, it's taking advantage of the opportunities that they continue to give us over and over and over. That's what we're trying to do here. Now, few stocks I'm liking, few stocks I've been talking about. One, I'm going to tell you right now, AMD, I do love them. They do have earnings on Tuesday. This is going to be big. Right now, what's happening? You have an ascending triangle. I'm not going to lie. I absolutely love it. I think it's beautiful. It's one of the best plays out there, I think, right now. It's lagging heavily behind NVIDIA, okay? NVIDIA has been on a tangent. It's been going to targets. Remember, we mentioned 209, 210. Well, you got up to 206 on Friday, 207. So that's playing out perfectly. We've been calling this out since 190. Congratulations if you played that. AMD in general, I think they're one of the best names out there, and I definitely think they're lagging, again, just here in my opinion. This is a 4-hour time frame. If we can break above 77, 76-ish, you'll run to 79 in a hurry, 79.80. And if you break above that, that's when this thing will go just bonkers. And then you have room to 85 and possibly pushing back to 100. I know that's crazy. That's down the line. This is all dependent on earnings. So, bear with me on what's happening there. But AMD still love them. It's worth mentioning. They were upgraded to the top semiconductor performer of 2023. Last year's, I believe, was TSM, which is funny because Buffett ended up buying that and then it went crazy. Next up, obviously, I've been talking about Target quite a bit. Target's been my favorite play. If we look here, continuous higher lows forming here on the higher time frames. You mounted the key level of 166.9, giving you a visual of what this key level is going to the weekly time frame. Just look at how relevant this is. This was your SR flip from back in 2020, and then also going back in March of 2021. You can see very clearly that's a massive pivot point. Guess what? You're mounting it. Look at this weekly candle. These are all great signs. Now, I do have a position in Target as well, and I'm going to tell you right now, It's basically set at the 200 SMA also of where I got in at on that retest. And these were all things I posted on Twitter. So that's why I always say, like, if you're not following on Twitter, I mean, that's where you get all the free information. I don't know what else to say, right? Here in Twitter. And so you came back down, mounted, boom, and you look great. You have a lot of gaps, a daily gap at 172 and another daily gap at around 177. I love the upside opportunity. And then if we really start getting bullish, you have an upside gap all the way at 204 and then up to 209. Data positions here, but I still love targets moving really good. But the name of the game right now is to not get overconfident or greedy with these plays like we have been recently, right? So making sure that we have, stops in place to make sure we're securing gains along the way also. Last up is going to be Amazon. This is probably the more interesting play here. What's been happening here on Amazon? We talked about this a while back when we had that wedge breakout. Boom, really nice, mounting all our key levels, pushing up here. Now, I do want to show you this key level here, 102.5. Let's zoom out really quick to give you a visual. This is the weekly time frame. Our swing low from March and April, massive level there. And then look, the swing high that we had back in 2018, 2019, and roughly in 2020 when you flip and mounted it, okay? So this is what I'm watching right now. I'm going to tell you, I think this is probably one of the most important levels on Amazon's chart in general, the whole thing. Okay, so if you get back above 102.5 after earnings, I think they have room to just absolutely kill it. So this is what I'm looking for on Amazon. And this is more of these are swing opportunities, the longer term viewpoints. When it comes to Amazon, after earnings, they're above 102.5. I'm going to tell you right now, I anticipate them having a massive comeback. I'm going to tell you right now, that's going to be the thing to watch. Until earnings, be very careful. If we start looking bullish into earnings, your upside opportunities to 109, and that can come in a hurry. We've seen this level be extremely illiquid between 102 to 109. So do understand that and be ready for that. And I do think Amazon could move very quickly in the short term also. So scalp opportunity, if the market continues, Amazon to 109 really easy before earnings. If you want to wait and get some chop, after earnings, if Amazon reports decent and you just stay above 102.5, I like it for the longer term trade to easily start pushing back up. Okay. Now, before I let you out of here, again, when we look at any plays, what am I saying? Dude, does this mean that I'm blindly going long? No. It means that I'm looking at indexes and waiting to see how we react. Okay. Just be ready for that. Also, too, if you're very frequently on this channel and you're trying to understand some supply and demand stuff, I do have a video being released on my other channel, which is all about education and the market, that will be released today. Check out the channel. It will actually be posted on the community page of our YouTube page here. Have a good one, traders. I'll see you tomorrow.